So, before you buy your first stock, you're going to want to watch this video. Hi, I'm Kevin Castaneda. In this Kev's Mindset, we talk everything finance, investing, mindset, and productivity. And in this video, we're going to be talking about buying your first stock. Now, this is a pretty monumental moment. When you go to buy your first stock, there's a lot of things that you want, or not a lot, but some key things that you want to know before you actually get into this process. So, we're going to start it off right here. First off, you need to know what is a stock so you know what you're getting yourself into. So if this is too basic for you, you could skip ahead, but I'll go through this really quick. So a stock is very simple. It's a piece of a company that you as a investor are looking at to buy. So let's use Apple for an example. Let's say there are 10 pieces of Apple, which obviously there are many more, but let's assume there's 10 pieces of Apple and each one costs $1. You have $1, so you could buy one piece of Apple. Now you own one piece out of the 10 pieces of Apple, which gives you a 10% ownership in Apple now, right? And so by you owning part of this company, if this company pays out something called a dividend. Now, not every company pays out a dividend, but some companies do. It's usually bigger, longer term, more established companies that pay out a dividend. A dividend is very simple. All it is a chunk of the profit that is distributed among the people who own it. So let's say you, your friend Bob, and your friend Jill all own one part of the company, right? And there's $10 distributed to all the shareholders. Well, there's only 3 shareholders who own 30% of the company. So each of you would get $1 each, and then the 7 other dollars would stay within the company. Or if it's an even distribution, you'd get 3.33 and 3.33 and 3.33, and you would all be happy and get your dividend. So as long as you know what a stock is, and it's not as complicated as it seems, trust me. When you look at a stock and you see all these charts and all these patterns and all these videos about the market going crazy and all these things, it seems very complicated. However, you have to start easing yourself in. First, one of the most important things you don't want to do is now that you have a basic understanding of a stock, you don't want to go on TikTok and see recommendations for stocks to buy and all of a sudden throw all your money in. Why does that not make sense? Think about it like this. Why would you, as a person, go and just throw all your money into something that you know nothing about? It makes no sense. And then this is the problem and the misconceptions that we get with the stock market. A lot of people throw in all their money because they say that they hear that the stock's going to go up like crazy, and the only reason they buy it is because they hear it's going to go up like crazy and they know nothing about the company, and then they complain that they lose money. And the stock market's a very simple game. Either you buy something called the S&P 500, which is ticker symbol VOO, and when you go and buy that, it's the 500 largest companies in the United States. You buy that and you keep buying a little bit over time. Or you do something called stock picking. Stock picking means that you as an investor think that you can pick certain companies that you think are going to do very well over a long period of time. By doing this, you assume that you can beat the general market, which makes 8% per year. Now, if you don't know, if you're all new to finance and investing, there's something called inflation. Now, inflation usually sits at an average of 2%. Right now it's a bit higher, but what inflation is the fact that as we print more money as a country, the value of that money goes down because there's more of that money. So as we print more money, inflation goes up by 2% every year. So let's say you have $100. In a year, it'll be worth $98. The same $100 will be worth $98 as when it comes to how much you can buy with that same $100, because prices and stuff went up 2%. So you as an investor want every single year to beat 2% and hopefully get way more than that, maybe 10 times that, like 20% when you're first starting. And by doing that, you are able to outpace inflation, and this is why investing is better than saving. Now, a lot of people think that saving up their money and throwing it all in cash is really good. And now I do admit that's much better than just spending it all. However, it doesn't surmount to the same thing that investing is. When you invest, you're beating inflation, so you're not just putting $10,000 away and then letting it sit there. If you're investing it, you're making your money go and work for you, and then that work that the money is doing pays you for the work it's doing after you already worked for it, if that makes any sense. So it makes a lot more sense to go ahead and invest. Now, when you're investing, if you're gonna pick a company, you don't just say this is a cool company with some crazy product and buy it right away. You look at a company that you think has a very good brand. It has a good economic moat. An economic moat means you think that if I had $1 billion, could I come in and just have a bunch of money and beat you? If the answer is yes, then that might not be a good company. For example, let's say Apple. Let's say I had all the money in the world. The likelihood that I can go in with all the money, just be some guy and have a bunch of money and try and beat Apple is slim to none. Why is that? Because Apple has built brand loyalty, and they've built a brand around their consumer and their consumers love this brand. So it would be hard for me as some random guy with a bunch of money to throw Apple off of its crown. Those are the types of businesses that I like to invest in, and that the big greatest investors of all time invest in. You look for a great business that makes money every year and has good growth going forward, and some of them pay you out a dividend, and you assume that they're going to continue to grow for X amount of time, and you buy that company. So that's kind of your first guide for stocks. I'm going to be talking a lot more about stocks in the future. So if you did enjoy this video and you like the basic understanding of it, go ahead and subscribe, do yourself a favor, and you'll definitely get started on your journey, and I hope that I can help you that way. Thank you so much for watching this video. Go ahead and smash the like button if you did enjoy. It would really help out the video and the channel. See you in the next one. This was Kev's Mindset. Don't forget to sign up with Public down below, where you get up to $70 of a stock of your choice. Public is a brokerage, a stock brokerage, where you can go and buy your first stock. So you can sign up down there and get up to $70 of a stock of your choice for free. Go ahead and do that. See you in the next one. This was Kev's Mindset. Thank you so much for watching.